just feel that your request should direct to me and you go to the office and back to me. So after I think twice, I attach a Group B lecture because I feel that is more comprehensive. And to be fair to those attended Tuesday, so now you can see a slightly different approach for Thursday group. And I try to download, it takes almost 1 gigabyte of data. So students say no, they are not going to download, you can access to the Google Drive. So I still feel that please ask question is still the best approach to learn. What's my problem here? So I let you have this video. So this is the last week lecture video. It's already there. The problem is when I upload this video, this is the consequences. I'm not sure where it goes wrong or not. So when the lecture video being uploaded, you have to request or access. Anybody can tell me that how to go to directly. Instead of you must send me a request, then I click here yes. So for example, I just click here like that. So there's something like that. I must click the share. So if 100 of your request, that means I have to click 100 times. So I just want to find out from you how about other lecture, how they upload this lecture note. Clear? So for me, I just upload here using add file, the link. For example, like this YouTube, I just add in the link. Normally, that's what I did. I just go to here and I just add the link. I just give it a link. Then you can get it already. So these are all links. But the problem is the link, I don't know why you cannot link directly. Must request. How about this video? I think this video you can watch it directly. Except this video, don't know why cannot watch directly. You must request. So this is my problem at the moment. Oh, sorry, I didn't present. Sorry, I didn't present just now. I just want to share with you last week. If you go to your Google Classroom for your Group A, you go to your Google Classroom Group A, you can see that last week I uploaded the video, the lecture video. And why am I asking upload this lecture video? This is a Group B lecture, not your group. This is a Group B lecture. Okay, for Group B. So I received feedback from the office. You request the recorded video for 3 hours. As I say, I just feel that your request will be directed to me instead of office and then back to me. So why you must go through another channel, then only reach me. You can talk to me directly. So I didn't attach your Group A because Group A and B is the same. But Thursday group, I feel that is more comprehensive because they are students asking questions. Okay, and I present it in a more appropriate, more proper than the Tuesday. And also to be fair to those already attended the Tuesday, so you see a slight different approach for Thursday club. Okay, if I'm trying to download this lecture video, it takes I think more than 5 minutes. I think about 10 minutes that they have waited for more than 10 minutes. It takes about 1 gigabyte of the data. So that's why I feel that it's better that you ask question. Okay. Office saying that yes, you have to upload. I don't know for what purpose. So at the same time, I want to ask your opinion. Is this type of short video clip 5 minutes, 3 minutes? Does it helpful or not? because if you don't like this one, then next time I'm not going to upload this one. This one actually you can get it by yourself. You just go to Google search, you just type IS16, IS36. You can watch a lot of different video, half an hour, 2 hours also got. Okay, but I give you the 5 minutes, 3 minutes, just give you an idea, a rough idea how actually today's topic we are going to talk about. Clear? So this is what I want to tell. And if I upload the video, I have a problem here. I want to share with you what's my problem. So when I upload the video, the consequences is I don't know why students cannot directly access to the video. I don't know what is the step that I go through mistake. So whenever you click, there will be a request for access come to my email. So that means if 100 of y'all, 200 of y'all request for the video, I have to click 100 times or 200 times. So how about your other lecture, how they upload this video? So for me, I just go to edit here and I add link. I add link means I try to link you to the Google Drive to watch the video instead of download. You got it? So I tried the other way, I download myself, but it take very long time, more than 10 minutes, and take out more than 1 gigabyte of the data. You got it? So that's why I don't know whether there's any other easier way to let you have this lecture video clip. But that's why I say, to me, all this stuff of short video is very much better than the 3 hours video. You ask questions better. So yesterday, I also create the link for today, and I give you the summary of the IS40 investment property and IFRS 15 revenue from the contract. These topics, take note, is a new topics. Those who study FAF repeat students, you don't have these topics. According to the schedule, we should discuss this one in week 6 and week 10. But these 2 new topics will not be assessed in the final until next academic year. That means this coming exam, you all don't have IS40 15, but I must cover it's in your syllabus. It's a new topics. Okay, it's a new topics. And then next receipt also don't have until next year, you're junior. So their exam will start in next year, next academic year. So, but for you all, it's good for you to learn these 2 IAS and IFRS to prepare you all to go to the degree level. So I intend to cover in the week number 9. So 6, 7, 8, I'll cover 3 standard: event, provision, and income tax. Week number 9, go through these 2 new topics, and also a short discussion on redemption of preference shares. Also not covered in the final exam. So week 10 to 14, I cut short 1 week, then keep week 14 as a revision week. Clear? So I attached the video clip also. This one is 7 minutes. This one I give as 1 minute only. Okay, but this one 17 minutes. You have an idea what actually is the investment property and revenue contract. Okay. So that's what I can share with you before I start. I hope that the number of students here, those new, no, it won't be covered in the coursework 2. Okay, don't worry. This new topic not in the exam, not in the coursework. Coursework 2 is week number 9. If I'm going to test you, because lecture is on the week number 9, and coursework will be week number 9 Saturday, so that's why it won't be covered. If last minute I change my mind, I want to cover, I will tell you what the question. Now I can tell you the question also. If I set question, I'll ask you a very simple question. What is investment property? You just tell me investment property, you purchase it to collect income, rental income. Okay, maybe only 2 marks or 3 marks. So it won't be tested in the course of 1, it won't be tested in the final. Okay, but because I covered it in week number 9 lecture, if I want to set in the course of 2, I'll tell you what the question. So this is something like a bonus mark to you, but not much. It's about 2 marks or 3 marks only. Clear? So that is what I can share with you. So I think now I got 181 and the live stream, I got 15. Still less than 200. Now let me start first. Okay. So please ask question. I think quite a number of students you send me WhatsApp. I answer you. This now I answer a lot of questions. That's why you feel shy to ask in the lecture, but nowadays you never feel shy. But some of students very polite. You tell me who you are from which group, Somehow your ID number, no need to be so detailed, you know. You got it? No need to show with the detail. I think what is important thing is you can tell me your name better. If you don't want to tell me your name also doesn't matter. Some students give me too much detail already. What is your name? For example, I'm eating, I'm from which DSC, group A, and then which number, group number 5 or whatever. You tell everything particular. Okay? So it's good. It should be the good manner that you introduce yourself. But most of the time the students just ask questions, they'll tell me who you are. So it's alright for me. I answer. But for those students I never answer you because your question too simple. Just for example, the student asked me the question, why there's an increase in asset? I must credit to revaluation reserve. Don't you think that this question is too simple already? That's why I don't want to answer. The question says, if the asset value increased, so why am I credit to the revaluation reserve? So if you can recall your paragraph 39, this is I highlight, and somehow you ask this question. When there's an increase in the value, we credit to revaluation reserve. The reason is paragraph 39. And I tell you the reason is because of the realization concept. Okay? So only this type of question I will answer you. The rest I think I answered you already. Okay, sorry for forgotten the record. Okay, now I'm going to start my lecture already. You asked me to record, I make me have to be very careful on all the wording that I'm using. Okay, now you're going to start the lecture. And I don't know why when I start recording, there will be some student being kicked out from the classroom. If anyone being kicked out later on, so please join back. So when the process of recording, any student coming in will be kicked out now. Because 185 now, I just realized that I must record it before I start lecture. If I start now, any student want to join now will be kicked out. So just take note on that. Okay. Today I want to give you a summary of what we discussed in the last week. Okay, today we are going to do a little bit of summary, and I want to discuss a little bit about inventory. Then the second hour and third hour, I'm going to discuss the IS number 10. In the week number 1, I give you these topics, am I right? Week number 1, am I give you the topic? Week number 1, we cover conceptual framework. Number 2, we talk about IFRS. At the same time, we start property, plant, equipment. Okay. Week number 4, we are talking about impairment already. Last week, week number 5, I finished the intangible asset and I start inventory. Week number 6, I supposed to do this topic, but I postpone it later. I bring forward this topic to today. Okay, but this one also very short. I need 2 hours only. That's why first hour I will discuss the revision. Yeah. So now come back to here. Recording is still not completed. See somebody remove, okay, from the meeting. So can somebody join in later? Okay. Those who cannot join in now, you can join in. Okay. So we are going to go back to some of the discussion that we go through. If you refer to this week tutorial, IAS 36 paragraph number 12A, what are the indication? You see, these are some of the highlights by the students, so that's why I come back here. If you remember your page number 18 in your lecture notes, page number 18. Asset is impaired when carrying amount more than recoverable amount. Only when carrying amount more than recoverable amount. Question number 8. So how to know that asset may be impaired? You should estimate your recoverable amount. Last week, your cost work test is already done. How to estimate your recoverable amount? There are two issues here. Is if you sell your asset now, how much you can get it? That is your net selling price. Number 2, you don't sell. You want to continue to use it. How much cash flow you can receive in the next few years? Discount it, present value it. That is how to estimate, not accurate one, estimate. So there are indication, there are observable indication that asset value decline more than expected. So this is the one I want to discuss with you. There are observable indication that the asset value decline. How to decline? 250. The decline 250 is more than 200. The decline is 250 more than 200. So 200 is expected. 200 is expected. 200 is called expected. Why 200 is expected? Because based on the example here, last week I told you already, the cost 600,000 is confirmed. This one is confirmed. Residual value is estimated. Okay. 5 years also estimated. So your 600,000 minus 100,000 residual value expected. This is called expected. So in 5 years, you estimate you are going to lose 500,000. So this 500,000 you estimate in 5 years, each year you lost 100,000. Estimate expected 100,000 loss. So 2 years you expected lost 200,000. 2 years, that is what you expected. You lost 200,000. Manadao, the actual net selling price is 350. The cost is 600, but the net selling price, that is your fair value less cost of disposal, 250. So 250 is more than, from 600 drop to 350. 600 drop to 350. 600 drop to 350. So the decline is 250. More than expected, 200. That is called external indication, not within your control. Not within your control. Look at here. Please read your notes. There are still students ask me how to differentiate between net selling price and fair value. How to differentiate between net selling price and the fair value. Fair value is a price agreed between the market participants. Between the market participants. I repeat, fair value is a price harganya di antara market participants. Market participant means those people who are in the market, the willing buyer and the willing seller. I'm willing to sell an item and you are willing to buy this item and the price agree between two of us. That is called fair value. But after I agree the price, in between I may have certain cost of disposal. Your cost of disposal, commission, brokerage fees, you minus it out. You minus all this cost of disposal. So fair value minus cost of disposal, that is your net selling price. That is your net selling price. Clear? So this is a point that I need to highlight. And last week tutorial also we discussed about the research. Research, remember, we need to study IAS 38. When I say IAS means MFRS 138, para 54 and 55. Para 54 and 55. 54, 55 tells you that this one will be expenses in SBL for research because of the uncertainty about future economic benefit. Yeah, so this one they're talking about uncertainty. Uncertain about future economic benefit. They're also talking about no identifiable product. These are the two main reasons why research always recognize an expenses. Clear? But for intangible asset, development cost. Development cost, it meets the paragraph 11. That is a definition. These are all definition, identifiable. For example, in the tutorial, we are talking about the medicine. The name of the medicine called Elisir. Elisir. So you have the control, and from this using of this medicine, you can earn future economic benefit. These are the definition. The character of the intangible asset, it must be identifiable, control, and future economic benefit. And we go to paragraph 57, A, B, C, D, E, F. These are the 6 criteria. 6 criteria. So if you remember your discussion, so technical feasibility can be demonstrated. This medicine, Elisir, can cure all ills. Can cure all ills. Okay, you got headache, no need to take Panadol anymore. You got running nose, no need to take vitamin C. You got cough, no need to take the cough syrup. You just take one medicine, can cure all you. And you are you got intention to complete the project, and this item is ready for sale. Because why? There's a good market available, and you are very certain that you are going to yield economic benefit, and you spend an amount which can be measured reliably. For this particular question, Elisir, the only thing is you still cannot get the bank loan, so no adequate resources, so development cost will be recognized as expenses. Clear? So last week we discussed on this issue also, the illustration and lecture. I just want to summarize this portion. How is the recognition of the development cost? Now, I want you to see this one. This is exactly as your revision for last week. When you see development cost, it seems like your expenses of the research. Do you see that? Your research and development both also must record in SBL. Should be. Do you see that? I highlight the blue color and green color. Development cost should be expenses in SBL. Development cost can be intangible asset in SIP. Can you see that? For research, no such alternative. Only for development cost, you have this alternative. Listen here. You are good A students. You are good A students. Let me see. Yiling, you are from the group A. You are from group A. You should be attending group A lecture. Can you ask me, Mr. Su, I'm not free on Tuesday, can I join the group B or not? You should be in group A. You cannot join group B. You cannot simply join group B. But if you got very reason, today you're going to sit for MUET exam. You see, nowadays I receive some students tell me that they are going to sit for MUET exam to know when. In the event any one of y'all you have MUET exam, the Malaysian University English test. Some of y'all doing MUET, am I right? So this is called very reason. So you can join the group B on Thursday class. Can you see that? So this is the meaning of you should. you should be in the expenses, development expenses in SBL. But development cost can be intangible asset. Dengan syarat it meet the definition. What is the definition? Identifiable. You know what is the product that you produce, and company, the entity has the control. That means you've got the right to use the asset, prevent other people from using it, and you sure that you can generate income from that. You meet the recognition criteria, technical, feasibility, you're going to complete it, and you are intention to sell it, and there's a ready market, you are very certain you can yield the economic benefit, and make sure your company got adequate resources in terms of the finance, human resources, technical expert to help you, and how much amount you can measure reliability. You can meet the criteria, then this one can be an asset. This one can be an asset. So I just want to quote you the same example. You can jot down there, tutorial 4, question 6, tutorial 5, question 4, if I'm not mistaken. So in this case, we break out the 500,000 into 2. We break out the 500,000 into 2. The 200,000 spent before. Okay, if the expenses 500,000 break out into 2 portions, any amount spent before the criteria met, you record in SPR as the expenses. Any amount spent after the criteria met or on the spot, so this one will be your intangible asset. So your story not finished. However, there's a word however. You already decided 300,000 is your intangible asset. Already decided. The reason is criteria already met. However, if you know that what's the recoverable amount, again, what's the recoverable amount? If your product suddenly fail, or not saying they fail, not so successful, that means the future economic benefit not so high. If your recoverable amount is only 280, which is the lower than the carrying amount, this 300,000 is called carrying amount. You can carry down, put it down, carry down, put it down. That's why you call it carrying amount. So you compare with the recoverable amount of 280. So carrying amount now more than recoverable amount. There's an impairment loss. There will be an impairment loss in SPL. So in this case, only 280 to be recognized as your intangible asset. Clear? So this one you have to be very clear because it's discussed in your tutorial question. Just want to show you your tutorial. This is in your tutorial. Tutorial 4, question 6. That is your tutorial 4, question 6. Okay? Can you see that? Tutorial 4, question 6, 150 is less than recoverable amount. So 150 all can be recognized as an asset. Tutorial 4, question 6. How about tutorial 5, question 4? Tutorial 5, question 4, you spend 800,000. 480 cannot be recognized as an asset. 320 can be recognized as an asset, but recoverable amount is 280. Okay, just to take note that tutorial 5, this is tutorial 5, question 4, the question there's a typing error, 800,000 here. Instead of 200,000, it should be 800,000 here. Discuss the recognition of the 800,000 development expenditure. So how to answer this 800,000 development expenditure? Listen here. In the exam question, I want you to answer like that. Development cost of 800,000 should be an expenses. 800,000 can be intangible asset if meet the definition and recognition criteria. But for this case, 480,000 incurred before 320 should be intangible asset. However, the recoverable amount is only 280. So in this case, 40 will be the impairment loss. That is how you discuss. Here got 1 mark, 2 mark, 3 mark, 4 mark, 5, 6, 7, 8 marks like that. It can be 9 or 10 and up. So that's why I want you to have the full coverage of the answer. So you use your own wording. You use your own wording. And there are some who ask me, can you use this short form SPL, SFP or not? Try not to. Okay? CA, RA. Can you see that? But in the coursework already, you write down this short form already. So I inform the tutors, accept your answer. But as what I say, I cannot promise you anything because you are going to sit for external paper. ACCA examiner may not accept it. So what you can do is, at the bottom here, you put a code. SPL is statement of profit or loss. SAP is the statement of financial position. In the event, you write down that. Okay? You can write CA equal to carrying amount, IA equal to recoverable amount. Clear? So in this case, you'll be very clear. Like for example, this case, you just put RA. So then the examiner know that your RA refer to this recoverable amount. Understand or not? So that is how you write short form properly. Clear? I won't encourage you all, but that's why I say for this the coursework and the next coursework, even in the final, because it's internal exam, so I get the lecturer or tutors to accept whatever short form that you are using, okay, to speed up the answer. Okay, up to here, any question? Okay, very good. Now the next this double entry I showed to you before is in your lecture note. I want you to split this accumulated depreciation, deduct from the building first. Deduct from building first to get the net book value, then compare your carrying amount with the revalue amount. You can get your revaluation stuff. Okay. When you study this IAS 16 and IAS 38, there's something that I need to highlight to you. IAS 1639, paragraph 39, is talking about revaluation increase. Increase is exactly equal to paragraph 85 of your IAS 38. This is intangible asset. 38 is intangible asset. 16 will be your property, plant, equipment. And 40, they are talking about decrease. So prudent concept is the same in your paragraph 86. So take note on that. Paragraph 41 talking about annual transfer. Intangible asset also talking about transfer. And 56 talking about factor limited the useful life. IAS 38 paragraph 90 tells you the same story. Okay, so these are the things that you need to see. A lot of paragraphs they are repeating, they are duplicating from each other. And not only these four, there are some more. There are others which are very, very close, very, very similar. You discover yourself. Because these are the few areas that we cover a lot in your lecture and the tutorial. Okay? Next. Before I go to this IAS number 2, I want you to go back to this lecture illustration. I want to highlight again, now we got 9195 and something more than 200 students here already. As I mentioned in the, this is a Google Classroom, not only for me to post messages. There's a comment here, can you see that? You can write your comment here. If anything, you can write here. Then I can see your comment. Okay? So, I put my comment that, do you see that? I repeat this sentence again. why am I receive feedback from the office? So if you can direct that, come to me. You got a lot of channel. You got my phone, WhatsApp me, message me, you can send email. You can even write your comment inside this Google Classroom. And I don't know why you must go through the office. And the office come back to me. I hope you understand what is my feeling lah. Okay, so feedback from students saying that students, you are required to prepare a lot of work. Remember that in the first lecture, after that I give you a conceptual framework video, and I give you this one. This is a summary of the video into 2 pages, am I right? This is a summary of the video into 2 pages. After I prepare this summary as a sample, can you see that this is a video 10 minutes summarized in 2 pages? Then after that I give you this 10 minutes. This one you no need lah, okay? You just summarize this YouTube 10 minutes. You do it yourself. That is how you learn. That is how you learn. Like this one 5 minutes or 3 minutes, you summarize by yourself. But the feedback is you have to do a lot of summary. You got it? So I hope that as a student, your full-time job is reading. So your full-time job is reading, and you do your necessary summary of this material. That is how you learn. If I prepare everything for you never learn. Understand or not? You never learn. It's not saying that I don't want to prepare. I already prepared for the full lecture note. Can you see that? I give you the full lecture note, and last time I give you PowerPoint slide. PowerPoint slide I didn't give you. See, I give you full lecture note, and this illustration also. Later on, maybe I give you this lecture illustration 3. Okay, so you have to do some work on that. Clear? So the feedback also mentioned that we have this illustration not yet complete, and especially this is example 9. Example this is example 9. A lot of students already work it out, but you cannot get the answer different because there's a mistake here. There's a mistake here on the working here. I just want to quickly go through this example number 9. If you got this question, a company revalue its property to 20 million in 2019. Originally, it's 10 million 10 years ago. The company's policy, take note, the company's policy to make the transfer. Question already tells you company policy. Last week I mentioned that IAS 16 permit a transfer in the paragraph 41. IAS 16 membenarkan permintaan under your paragraph 41, but not compulsory. Not compulsory. If the examiner indicate that it's the company's policy, then only you do it. If the question is silent, you look at paragraph 41. If question is silent, IAS 16 permit. You want or you don't want, up to you. Okay, if this is not the case, it's not compulsory. It's not necessary. It's not necessary. You want to do it because of paragraph 41. You don't want to do it, it's okay. Because company policy never mentioned that. Unless the company's policy say you have to do the transfer. Okay, so this company make a transfer. So the original cost of the building is 10 million. So I need to separate this item into 2. I need to separate this item into 2. 10 million, 2 million for the land, 8 million for the building. So jot down here because if I write down on the chat box here, very small. So you got the land. According to the question, 10 million, 2 million for the land, 8 million for the building. 2 million. So this is something to start. Are you okay up to here? This is your land, this is your building. But this building subject to depreciation. 10 years ago, divide by 40 years. 40 years. Accumulated depreciation. For 10 years. For 10 years. Accumulated depreciation for 10 years. What you are going to do is, you are going to use your 8 million times you have to divide by 40 years. So times 10 divided by 40 years. So that is how you get 2 million. So now got 6 million. So total will be 8 million. Today. Up to here, any problems? Your land originally 2 million, building will be 8 million, altogether 10 million. So this 2 million no need depreciate, but building 8 million, you have to divide by 40 years times 10 years. So this is called book value, or carrying amount, now become 8 million. Now when value, when you revalue on the 1st April to 20 million, 1st April become 20 million. First April 2019. Now your land become 8 million. And your building become 12 million. Altogether 20 million. Can you see that? Here 2 million become 8. That's a 6 million revaluation of the land. I'm not interested. I'm interested on the revaluation reserve for the building. Revaluation reserve for the building will be 12 million minus 6 million equal to 6 million. That is one I'm interested. That is one I'm interested. And not only that, I'm interested on the depreciation for building. Now it's equal to 12 million divided by 30 years. Now you confused already. Why 30 years? Before that it was 40 years. Before that it was 40 years. But 10 years already over. 10 years over. Now we got remaining 30 years. The question say the remaining useful life is unchanged. The original useful life unchanged 10 years ago. Now when you revalue to 20 million, 8 million for the land, 12 million for the building. So now your depreciation will be $400. The depreciation is $400. This depreciation is based on the revalue amount. Okay. So compare with the depreciation. Compare with the depreciation based on the original cost. Original cost is 8 million. Divided by 40 years, this is 200. So the difference will be 200 increase. You got it? That is what I want to discuss with you. The increase will be 200. So annual transfer will be this one. Or you can use, this one is called annual transfer. Or you can use your 6 million. You can use your 6 million divided by 30 years. Same thing also, you can get 200. It's the same. So every year you will transfer 200,000. So this is a story for this example number 9. You want to snap a picture, you can do it. Originally it's like that. Originally it's like that. 2 million and 8 million. This is original cost. This is original cost. 10 million. Now become 8 and 12. So can you see the land increase from 2 to 8? The land increase from 2 to 8. You got a 6 million revaluation itself. The building from 8 become 12. It should be 4 only. It should be 4 only. That means now we need to recognize this 2 million. Cancel it, eliminate it. You need to eliminate it first in order to get your revaluation result. So just want to highlight to you the journal entry. Just need to highlight to you the journal entry. I'm very sure that I need to credit revaluation reserve. I'm very sure that I need to credit revaluation reserve. I need to give it. My building from 8 million becomes 12 million. Do you see that? My building 8 million becomes 12 million. There's a 4 million increase. Okay. This is your journal entry. This is what I want to highlight to you. And then your accumulated depreciation no use already. Your accumulated depreciation no use already. So what you need to do is, I need to debit accumulated depreciation. $2 million. And then same thing also, I'll credit revaluation reserve, 2 million. If remember your tutorial, question 5 and question 6, tutorial 3, this is your original journal entry. You credit revaluation reserve 2 times. 2 times. But I hope that your tutor to discuss with you, there's an alternative. There's alternative proposed by the IAS number 16. So this accumulated depreciation, when I debit, I need to credit the building first, deduct first. So when I debit accumulated depreciation, 2 million, I credit building first. I minus from the building. I minus from building. And now only I debit my building. Now this one become book value, or so-called carrying amount. So your building become 8 million minus 2. Book value becomes 6 million. And one shot, I credit my revaluation reserve, 6 million. So what I need to highlight to you is, by this 6 million, actually is the same from here. So in the exam, follow this format, the second one. Deduct from the building first. Accumulated depreciation, deduct from the building first. It is called elimination. Because no use already. Elimination of the accumulated depreciation. Once you revalue the asset, the accumulated depreciation eliminated. And the second one, we deduct from the building first. Okay, so I hope that my explanation here clear to you. You jot down on a piece of paper, then you can get a better understanding. So remember, I need to show you this one, okay? But in the exam, as I say, we follow the second one. So we follow the second one. Accumulated depreciation deduct from building first. Understand? So now I can fill up the illustration already. In the statement of profit or loss, this one is more on the statement of profit or loss. That's why students confuse this word, statement of comprehensive income. Statement of profit or loss. This is the statement of profit or loss. So depreciation for the year 2020 will be 400,000. This is only for the building only. 20 million, 8 million for the land, 12 million for the building. And transfer, this is your annual transfer. This is your annual transfer. Here, including your land and building. Property here is including your land and building. $20 million. So, but minus depreciation is only for the building. And your equity revaluation itself minus the annual transfer. This is your 20 million, 8 plus 12. Statement of changes equity. Minus annual transfer to the retained earnings. Yeah. Bookings, carrying amount non-current asset. This one is the original. So your 10 million take out the land. This is only for building. Building 8 million divided by 40 years times 10 years. That's 2 million. So carrying value of the 8 million here, including land building. Land is 2 million. Building is 6 million. So this one is your 2 million plus 6 million. Land and building. So this one will be 8 million plus 12 million. So your building from 6 become 12. Six is your so your geometry, can you see that? It is combined. Inside the 12 million, 6 million for the building, 6 million for the land. Accumulated depreciation for 10 years. This one for 10 years. So current year depreciation, 30 million minus the land. Minus the land. Transfer original depreciation 200, new depreciation 400, transfer 200. So that is how you transfer. Okay. So this illustration 9, I hope that it helps you. You take a very short break. I'll come back. I will start the IS 10 event after reporting period. Okay, take a short break. $40 10 years gone already. 40 years from the question, economic life 40 years. Now after 10 years, this is the same like your tutorial, last tutorial. Company revalue the property on the 1st April. The original cost is 10 million 10 years ago. 10 years ago. Now after 10 years, the original useful life 40 years unchanged. That means you got remaining 30 years. Understand? That is how you read your question. Rebecca, you got it, huh? We cannot transfer the whole revaluation of 12,000 because only building. Just I mentioned that IAS 16 permits a transfer, and it's a company's policy. If question silent, not the case, not the policy, it's not necessary. And now this land got no depreciation. Building got depreciation. So transfer is in respect of assess depreciation. Land got no depreciation. No need to transfer. But building, you got depreciation. So when you do your annual transfer, only transfer the 6 million. Clear? The transfer is only the depreciation based on original cost, depreciation based on the revalue amount. Remaining 30 years, correct? Rebecca, you got it? Originally 40 years, 10 years ago, now remaining 30 years. 40 minus 10. Okay, Yongwei. Not the whole revaluation because land no depreciation. Annual transfer is based on the depreciation. On the cost, based on the depreciation on the revalue amount, you find out the difference. Very good question. Yongwei got it, huh? Okay, you take a short break. $220 students. Okay, you take a short break. come back. Sorry, too long time already. Now, let me come back here. Yongwei, I hope you got it already. I answer a question already. Now, if you want, you can refer to this paragraph number, your property plan equipment 57, 58. Paragraph 58, page 11 in the lecture note. Land and building accounted for separately. Land has unlimited useful life, not depreciated. Building has limited useful life. That's why you need to depreciate. As any increase in the value of the land on which the building stands does not affect the determination of the depreciable amount of the building. So the land value increased by 6 million, that is belong to the land, don't touch. We only touch on the 6 million revaluation of the building. And today there's another student asked me a question I never answer in the WhatsApp group also. It's not in the group, the student sent me a WhatsApp. The cost of land, including cost of the sites, dismantlement, removal, restoration. So that portion of the land asset is depreciated over the period of benefit obtained by incurring those costs. Land itself may have a limited useful life. And in this case, you depreciate in a manner that reflects the benefit to be derived from. So this is in the case, if the cost of land, including dismantlement, you bought the land, you need to incur some cost to remove the old building, to restore the land. So that one, it may be have, if let's say you can foresee that there's a future economic benefit, then you derive by the useful life. Otherwise, land always subject to revaluation. So whatever we discuss just now is based on paragraph 58. Paragraph 58. Clear? Now, next. There's one more question. You see, students, I told you already, you don't want to ask a question here, but you send a message to me. This student asked me the question about the inventory. Inventory, paragraph 23. Inventory, paragraph 23. Can everybody look at this one a short while? Inventory. Paragraph 23. Inventory, page 39. Page 39. I hope that last week my discussion is clear enough. Inventory, I got 4 items here. Held for sale, finished good. Process of production, work in progress. Raw material used in the production. Suppliers, I mentioned is per current. Am I right? Per current. The salon, haircut, they keep the shampoo when they provide services. And how to differentiate between net realizable value and the fair value. Can you see that? Net realizable value is when the item is already damaged, lost out. Now you need to repair it. You need to repair. And you are not only need to repair, you need to get a salesman to sweet talk to you and sell it, pay commission to the salesman. That is called net realizable value. But fair value, no need to do all this funny thing. The item damaged, let it damage. So in the market, see any people want to buy or not. There are people say doesn't matter, still can be used. Market participants, bidding buyer, bidding seller. So they accept the price. That's called fair value. Okay, net realizable value is in the ordinary course of business activity. In the ordinary course of business activity. That means this is a normal buying and selling. Kedai buku yang jualing, you menjual alat tulis, menjual buku. That is called ordinary course of business. But fair value, not necessarily. In the kedai buku, you may have a table and chair. You may have old computer. You are not. This is not your business. Selling table and chair, selling computer, old computer is not your ordinary course of business. But there are market participants come in, they offer you this price to buy your old table and chair, to buy your old computer. That is called fair value. That is called fair value. So now I hope that you know how to differentiate between net realizable value and the fair value. But fair value can be on the inventory also. There are some old inventory, as I mentioned just now, damage already, you need to repair, you need to pay salesman commission, then you can get a net realizable value. But if you just leave the inventory, leave it like that, you see, sometimes you go to Kedai Buku, they got a lot of old books. Books is ordinary course of business activity. But these old books some torn already, damaged. So they leave it, see anybody want to buy or not. So it's a orderly transaction between the buyer and the seller. Clear? So NRV for the inventory may not be equal to the fair value. Clear? Fair value, it may be most likely lower than NRV. Most likely, not necessarily. Okay, now come back to just I mentioned about paragraph 23. Paragraph 23, the cost of inventory that are not interchangeable. Not interchangeable means what? Paragraph 23. Can you see that? IS number 2, paragraph 23. Not interchangeable means table and chair. Computer and printer. I want a table, you don't give me chair. I want a computer, you don't give me printer. In the furniture shop, you measure all the table and cost. You follow historical cost. And happen that you found that all your chairs are outdated, obsolete. These chairs, you got an NRV below the cost. So listen here, table, I follow the cost. Table, I measure it at cost. Chair, measure at the NRV. Chair measure at NRV. Consistency concept say you are not consistent. But prudent concept come in. The chair NRV is below the cost. So prudent concept review. Paragraph 23 allows you membenarkan. If that's the case, these items they are not interchangeable. You are allowed to measure one item at cost, the other one item at net realizable value. That is called specific identification. Specific identification means based on the individual items. Okay, or terbalik, table in the NRV, chair in the cost also can. If the chair, the cost is lower, then you value the cost. And the table, some damage already, so you can value at the NRV. Either way. Clear? Okay. That's how to discuss paragraph 23. Specific identification means specific costs are attributed to the identified item inventory. This is the appropriate treatment for items that are segregated for specific project, whether they are bought or produced. Sometimes you may have a certain material. For project A, the cost lower. Okay, because after negotiate with the contractor, for project A, you can earn a lot of profit. So that's why you are able to lower down the price. Clear? So this is called segregated for specific project. However, specific identification is not appropriate when there's a large number of items which are ordinarily interchangeable. For example, supermarket, Yummy, Tesco, Giant. So all these, a lot of items they are interchangeable. For example, you look at the rack there, you got a lot of Maggi Mee. All these Maggi Mee, they are ordinarily interchangeable, same price, same item. You can have a row of Nescafe 3-in-1. Okay, either green color one, rich or classic or normal. So these are called ordinarily interchangeable. So in this case, we are going to apply the first in, first out or WAC. That is how to apply your cost formula. Clear? Go back to this paragraph 13. Measurement of the overhead. Allocation of the overhead based on normal capacity. Last week, I write down in the chat box. Now, I try to put it into this paragraph 13. Paragraph 13, can you see that? Allocation of the overhead. Paragraph 13. You can just snap a picture because it's already discussed last week. I make it smaller a little bit. Okay, allocation of the production overhead based on normal capacity. Assume that your production overhead is 500. Normal capacity is 100 unit. So overhead will be 5 ringgit, no problem. If actual unit is low, can you see low production? Low production. Normally is in the normal circumstances, it should be 100. Normal should be 100. If you got low production, 80 units times 5 ringgit, that means 400,000 only. Compared with the 500,000, that's unallocated. Unallocated overhead written off as expenses. So this one we discussed on the chat box last week. Now I put in the proper typing. It's just snap a picture. You study in management accounting, this is called unallocated overhead. Next, how about if there's an abnormal high in production? Abnormal high in the production. Instead of 100,000 unit, now you produce 125. Like your smartphone, the number of units increase. So now you base on the actual unit. You base on actual unit, so each unit production cost will be decreased, so that inventory are not measured above the cost. Who asked you to do that? Prudence concept. Prudent concept. So your fixed overhead will be 4 ringgit each unit. So when you value your inventory, you got your direct material, direct labor, variable overhead, and you got fixed overhead. Last time you write 5 ringgit, now you write 4 ringgit. Because of the fixed overhead per unit go down. That's why your smartphone price going down now. The number of unit increase. Okay? So I hope that I covered enough for the last week. We spent 1.5 hours for the last week division. So we come back to our lecture today. IS number 10. Event after reporting period. Okay, the rest, any other question to ask? No, I'm going to start our topic here today. Events after reporting period. 10 years ago, 2011, MSB issued MFIS 110, applicable for the annual period beginning on after 1st January 2012, is equivalent to IS number 10. It's the same. That's why I say MFIS is Malaysian Financial Reporting Standard 110 is equal to International Accounting Standard number 10. So it's 20 years ago. You see, 10 years ago, MFIS come out. But this IS number 10 is already in 2001. They got the original IS 10 issued by IAS committee in the May 1999. Yeah. Next week lecture will cover this contingency. So now it's called IS 37, Provisions, Contingent Asset and Contingent Liability. And 2002 they revised. This is a little bit of history. And then what an amendment, because of the financial instrument, they did some amendment on that. This one you no need to study. Just read it as a history. Now, we come back to the content. You cannot run away the definition, the recognition criteria, measurement, and last one, disclosure. These are the 4 areas for all accounting standard. Definition, you need to know the terms. Recognition, where are you going to record? Are you going to record this item in SPL? Are you going to record this item in SAP? When is it? This year or last year or next year? Measurement, how to calculate. Okay, and finally, the disclosure. Today's topic very short only. I will talk about your 2-time event, adjusting event. The second one is called non-adjusting event. There are some item you need to do debit and credit. That is called adjusting. There are some item no need to do. That is called non-adjusting. You no need to do, but you need to write down in the notes to the account. That is called disclosure notes. And then after that, you take a short break. We'll discuss about your dividends. We'll discuss about going concern. This one will take about another 20 minutes after the break. Okay? So, disclosure. So, now what we are going to see here now. This amendment, you just read it yourself. It's not important. And the first few pages here is just introduction. Why there's a revision, what are main changes, and so on. Okay, now come back to here. Objective. What is the purpose you study this IS number 10, MFIS 110? Prescribe an entity should adjust. You should adjust, means change. Use your pencil jot down. Should adjust, means make changes. Make changes means prepare journal entry, debit and credit for event after reporting period. Make changes for event after reporting period. Good day, students. Last week, I discussed this one in the chat box here. Remember, I write in the chat box here. Then I found that students may not get it. So that's why in the QB, I prepare this typing note. So this is called, I do some adjustment. I do some adjustment on the lecture. That's why when I upload the lecture, I upload the lecture B for you all. It's something like that. That is called, I do it after the lecture adjustment. So because I found that it's necessary to adjust it to make you get a better understanding. Otherwise, you will ask question. So, and then the writing there is very small. So now I put it like that, it's very big. It's clearer to you. So now you can understand what's the meaning of adjustment. Adjustment means make changes. Make changes to the financial statement. You do a debit, you do a credit to change the figures. And also, the disclosure that entity should give about the date when the financial statement authorized for issue and about event after reporting period. Any disclosure note, especially on the date when the financial statement authorized for issue. Authorized for issue means what? Your accounting year end can be 31st December. Your accounting year end will be 31st December. But the date for authorized for issue, not necessarily the same date, because your account need to send out to the accountant, get a signature, send out to the external auditor to audit the account, okay, give opinion, then come back, director sign. It may easily take about 2 to 3 months, sometimes 4 months. You learn Companies Act, it can be up to 6 months. After 6 months, you'll be subject to fine. Then you appeal again. It may be 7 or 8 months. You got it? So the date is very important for us to know when are the issues that you need to disclose if we are not going to adjust it. Clear? The second part of the standard also requires that the entity should not prepare the financial statement on the going concern basis if, okay, if, be careful, if going concern not appropriate. This is the second part of the story. I will talk to you after the 10 o'clock. Okay, so 2 things you need to study for this IS number 10. What are things that you need to change? What are the transactions no need to change, but you need to disclose it? Point number 2, dividend, not mentioned here. And going concern is no longer appropriate. COVID-19 hit in, so business cannot continue in 2021. So 2020 you close account and you must announce to the whole world, this is my last set of account. 2021 no more already because business is going to close down. So what are you going to write if going concern is no longer appropriate? Okay. Now, very important paragraph number 3. Like your paragraph 39 and 40, I want you to read 1 minute and later after the class, you copy all this one. No need the whole thing. You copy this one. You copy 1 time, copy 2 times, because so short only. Listen here, you copy 5 times on the same piece of paper and you burn it, put inside the water and drink it. Don't do that. You read 1 minute, read it. Okay. After 1-2 minutes, you read. What's the event after reporting period? Event, sesuatu perkara. sangat bangkit after the reporting period, selepas tarik laporan. Favorable, good news. Favorable, good news. COVID-19 vaccine came to Malaysia 2 days ago on Sunday. This is called favorable event. Unfavorable, anyone from Perak, I think 2 days ago in Perak, the cases reported suddenly shoot up to 1,000 cases. So all these things is called uncertainties. I don't know what happened. I think there's so many, I think last few months saying, suddenly also shoot up 1,000 over or 2,000 cases. This is called unfavorable, something that not so good to you. Okay, so even after reporting period can be good news, can be bad news. Favorable and unfavorable. And it must occur between the antara end of reporting period. Use your pencil jot down there. 31 December 2020. I assume make your life easier. 31st December 2020 is your end. In your exam can be 28th of February, can be 31st of March. Okay, any day, any day. So I assume that 31st December 2020. Anything between this date and the date when the financial statement authorized for issue. Today is already February 23rd. 23 hari bulan February. The accounts still with the auditor. After auditors sign the books, you need to send back to director and then get the AGM members approved. So authorized for issue, it may be something like 20th of March. Okay, you can put it there. 20 hari bulan March 2021. So in between this date, 31st December 2020, start from tomorrow 1st January 2021 until today, until March 20 hari bulan, the date authorized for issue, there are a lot of things can happen. So you have to check that, is there any evidence other than bukti bahawa this condition means suatu perkara, the event. The condition means the event already existed, telah wujud pada, can you see the word, pada akhir tahun kewangan, at the end of the reporting period. So if there is, then we need to change the event. That is called adjusting event. Listen here, you must have evidence, mesti ada bukti bahawa the condition already existed, telah wujud pada 31 December, but you don't know. What are the event? I just quote you example now. Today is the 23rd of February. Today, 23rd of February, you go inside your warehouse, gudang. You found that some of the inventory damaged by the termite. You know what's the termite? Anai. Okay, so this termite, they will come suddenly destroy your inventory. It will take few months, you know, if you know what's the termite, they like to eat your papers. So later on you check your storeroom, especially those who stay in the wooden house. I think now a lot of y'all stay in the apartment condominium or this concrete house. Okay, those days when I was young, we stay in a wooden house, rumah papan, and you check all these termite. So the books, my old books, I put on the floor. Within a few months, I think 3 months, if you never touch, you can see the first book at the bottom is bitten by the termite. So there are evidence that this inventory already damaged on 31st December, but I don't know because I never go and open up the warehouse at the bottom. I only see from the top there, everything in order. This is called evidence of the condition existed. Second one, indicative, menunjukkan the condition arose after the year end. After, what does it mean? Yesterday, 22nd of February, there was a fire in Encik Ali's warehouse. All the things damaged. Encik Ali owe me money. I sell good to Encik Ali. Encik Ali is my customer. So now Encik Ali's warehouse burned by the fire. Or yesterday, there was a heavy rain, flooded. Encik Ali's warehouse was damaged by the flood, banjir. So this banjir, this kebakaran, indicative of condition arose after the reporting period. That means on 31st December, Encik Ali is in a good condition. Nothing wrong. But on the 22nd of February, I found that Encik Ali warehouse burned already. So very likely Encik Ali cannot pay me. That means I may have financial difficulties, because if Encik Ali is one of my major customer, my cash flow will be affected. But this is called non-adjusting event because why? The fire, the flood damaged the warehouse of Encik Ali, indicative of condition arose after the reporting period. Can you see the point? Same thing also the inventory just I mentioned. If the inventory damaged by the termite, then there's evidence that 31st December inventory already damaged. But if yesterday 22nd of February, I asked my worker to go inside the warehouse, take out the inventory for sale. Mana tahu the worker very careless, not careful, so broken the inventory. Now this inventory cannot be sold. Indicative of condition arose after the reporting period. So this item I supposed to sell at a selling price which is higher than the cost. Now cannot sell already. But it doesn't affect last year's account, am I right? So indicative of condition arose after the reporting period. Any losses is the second year one, not the last year one. This is called non-adjusting event. So I hope that you are very clear on this adjusting and non-adjusting. Adjusting means last year figure you need to change it because you've got evidence to prove that on 31st December this loss already incurred. Second one is non-adjusting because it doesn't affect the last year's financial statement. Okay. The process involved in the authorization financial statement depends upon the management structure, statutory requirement and procedure. In some cases, it requires to submit the financial statement for approval. Can you see that? In such a case, authorized for issue on the date, not the date when shareholders approve the financial statement. So you are given this example. So financial statement authorized for issue will be 18th of March. Okay, because the board of directors review and authorize them for issue on the 18th of March. So this will be the date. No need to wait for the shareholders. In some other cases, it will be the other way around. So you read through all these things. This is studied in your law paper. I won't cover this one. Okay, now, event after reporting period include all events up to the date when the financial statement are issued, up to the date sehingga hari itu. Even if those events occur after the public announcement of profit or other selected financial information. So, definition done already. Now, I want to see the recognition. Definition you done already. This is your definition, as I mentioned. Definition. Now, we come to this recognition and measurement. Entity shall adjust. That means you're going to change the figures to reflect. To reflect means to show a true and fair view. So you are given some example here. So A I will cover in next week lecture because this is IAS number 37, provision, contingent liability, contingent asset. Settlement of the court case. Okay, this one next week I cover. I cover B first. B, number 2, sales or inventory. Give evidence of their realizable value. Look at here. Get your pencil to write down there. Sales or inventory after reporting period. Give evidence of their NRV at the end of reporting period. 10. Inventory cost 500,000. This one at 31st December 2020. Subsequent disposal at 450,000. It's called NRV. Below cost. Can you see that? Subsequently, you dispose it at the NRV 450 below the cost. Provide evidence of condition. Existed 31st December 2020. The inventories already damaged or obsolete. You see that? This inventory should be sold. Should be able to sell at, for example, 650,000, for example only. Should be able to sell for 650, but now subsequently disposed as 450 below the cost. It provides evidence of the condition existed at 31st December. This inventory already damaged or obsolete. So the additional loss $50,000 to be adjusted. Deduct from inventory. Understand or not? This is the first point. I type it here clearer, am I right? Instead of on the chat box. So recognize in SPL. Deduct from inventory, then recognize in SPL. Debit SPL, credit inventory. So we are going to debit to the SPL, credit to inventory. And get it? Subsequent disposal inventory after reporting period at NRV below the cost. Provide evidence. Next, bankruptcy. Customer won't become bankrupt suddenly one. If today, February 23rd, you read the newspaper, you realize that Injali become bankrupt. You confirm the loss from the newspaper, report that Injali become bankrupt. Injali would become bankrupt suddenly one. If you learn the law paper, bankruptcy procedure will take minimum 3 to 6 months, sometimes drag until 1 year. Because when someone was filed for Bankruptcy Act, the policeman will come investigate and check everything in order, see whether he's able to pay you back or not. If there's any asset, they'll be confiscated. Okay, summon. So after a few months, then they confirm his bankruptcy. So in this case, it's confirmed that the loss already existed. It provides evidence of the condition existed at the end of the reporting period. So you need to adjust. That means if you record your customer 500,000, inside of 500,000, entirely 100,000 going to become bankrupt, you need to create an allowance for doubtful debt. Allowance for doubtful debt. So this is called receipt of information after reporting period, indicating that asset impaired. Asset was impaired. That amount of previously recognized impairment loss for the asset need to be adjusted. Listen here. You already learned your doubtful debt, your bad debt, allowance for doubtful debt, am I right? I want you to get ready. Now it's already February. March, April, you sit for exam. May, June, you enter to degree year 2. When you enter to degree year 2, if your lecturer tells you that there's no such thing called bad debt, no such thing called doubtful debt, I already inform you now. The new term is called impairment of receivable. Do you see the word here? Asset was impaired. So don't be surprised when you go to degree level, you see the word receivable net amount. In the notes account, you see that receivable 500,000. Current year, there's impairment. There was impairment of the receivable 100,000. So you don't ask what is the impairment of receivable. Soo Ging already informed you in the diploma level. Impairment of receivable means bad debt, means doubtful debt, means allowance for doubtful debt. You got it? These are the new terms you have to catch up yourself. It's already insisted, but in your syllabus not yet changed. Okay, so I let you know because accounting standard also not yet finalized. So that's why you still study bad debt and doubtful debt. In your tutorial also we are going to use the doubtful debt. Okay, but when you go to degree, lecture tells you the impairment, don't say this Soo Ging in the diploma, don't know what is he teaching. You got it? I already informed you now. Okay, in your syllabus, you still follow bad debt and doubtful debt. But in the degree, if there's a change in payment, you take it, there's a changes. Okay, done. Next, C. I say A, I will discuss next week. Now C. Determination after reporting period, the cost of asset purchase or the proceed from the asset sold before end of the period. So, what's the example here? 31st December, I close my account. But on the 22nd of December, I go to the computer shop. I say, I confirm I want this computer. So the price is 5,000 again. So generally, on the 3rd or 4th, January, the boss of the computer shop come back and tell the salesman, hey, Soo Ging, my good friend, don't sell to him at 5,000. Give him 10% discount, 4,500. That is called determination. Menentukan the price of the set. So I already recorded I want to buy the machine 5,000, but now the boss say 4,500. Can I tell the boss don't do like that? Very troublesome. I have to change my account. It's better off, am I right? So I will change it. This is called adjusting event. This is good news. Can you see that? Good news. Same thing also proceed from the sales of asset. I got some old computer, old table I want to sell. I want to sell scrap value. Scrap value. Sell $100 enough. Then later on the companies after 31st December, before 31st December, I confirm, never mind 100 sell to you. Then after that, on the Tiga Hari Bulan January, subsequent year, the company come and tell me that actually these things are worth a lot, not only 100. So pricing, so I pay you 150. So can you see that? Change the price of the selling price after the reporting period. This is good news. Determination after the reporting period of the amount of the profit sharing. What is the profit sharing? Bonus you should know. Bonus you should know. Bonus is accrual basis. You got it? So profit sharing also accrual basis. If the company got a policy saying that salesman, if 31st December you can hit the targeted sales, from the sales figure I will give you 1% as the profit sharing. So that is called present obligation. The company got an obligation at the end of the reporting period. Same thing also for the bonus payment. The company is saying that if your company is doing well, you can achieve certain amount of the sales figures, I will pay you 1 month bonus or 2 month bonus. So it's an obligation, it's a promise. is a duty responsibility to pay. So after 31st December, the company decided to give you the profit sharing. The company decided to pay you bonus after 31st December. But this payment is belong to last year one. So that's why I need to adjust the figure. I need to change the figure. Fraud or errors. Errors, you study in the first year, correction error, am I right? You prepare journal entry to correct the error. Fraud. Errors is unintentionally. You got no intention one. Happen to make mistake. But fraud, sometimes you purposely do something. Remember one of the tutorial, we are talking about this receivable factoring. It's a fraud. Remember the tutorial? We are talking about this company sell the receivable to the Speed Cash Financial Service, and you're going to record as a factoring. But at the end, the company is still responsible for the outstanding amount, so it should be a loan, not a factoring. So this is called a fraud. You need to adjust the account. Now, the next one is called non-adjusting event. Not adjust. Not adjust, what are the example? Decline in the fair value of the investment. You buy shares. You buy shares, the share price going down. These are not normally related to the condition at the end of reporting period. Okay? But reflect the circumstances arise subsequently. Therefore, they do not adjust. Do not update at the end of the reporting period. But you need to give additional disclosure. This is called non-adjusting event. Okay. I want to jump to paragraph 21. Can you see paragraph 21? Paragraph 21. These events are material. Very significant. A fall in the value. You buy shares at 10 ringgit, suddenly go down to 5 ringgit, half gone already. It could influence the decision. So you must disclose. So you need to disclose the natural event. Due to the COVID-19, the demand for the product go down. So estimated the share price from 10 ringgit become 5 ringgit. Or a statement that this estimate cannot be made. Okay? Paragraph 21. Paragraph 22, they give you another few more examples of the non-adjusting event. Just now we are talking about fall in the value, am I right? Business combination, A and B combined together, or you sell one of the subsidiary, announcing a plan to discontinue, like a product A, B, C, A not making profit, I want to sell it off, stop production. Major purchases are asset. You buy your property, plant, equipment. Destruction of the major plant by fire. Can you see that? Fire, you can use a pencil. It may be flood, maybe earthquake, maybe COVID-19. Okay, destruction of the major production plant. But all these unforeseen circumstances, these are called example of non-adjusting event. Why non-adjusting? Because it doesn't affect 31st December. Announcing or commencing of the implementation of the major restructuring. This one next week I'll cover. Share transaction defeat, or foreign currency exchange defeat, tax rate change it, defeat. This one all defeat. Because this one I'll cover in the next week lecture. Okay? So, you take a very short break. I'll cover this dividend and going concern. A short one. I'll cover this dividend and going concern. Paragraph number 12 and paragraph number 14. Take a short break. I need less than half an hour, maybe about 20 minutes for that.
Sir,
Yes.
can I see back the example for the sales of inventories one?
Okay.
这是谁啊？
This is the one.
Yeah, this one.
information. This is a paragraph 9b2. And we have an assumption that these inventory are ordinarily interchangeable. They are in a single class. They are the same, all grouped together. Now I want to give you another example. Okay, I hope they all come back. The part you type before IS number 10. What's the before IS number 10? You mean this is the inventory, the fixed overhead allocation? Okay, Jiala, this is the one you want to see. Okay, I'll let you see again. So this is talking about the fixed overhead. It's supposed to be 5 ringgit per unit. 5 ringgit per unit. If actual unit below 100, they will be unallocated. Sometimes they call it unabsorbed. But if the production is abnormally high, instead of 100, now you produce 125. The cost per unit becomes smaller. So this one is 4 ringgit per unit. Per unit, setiap satu. So last time is 5 ringgit, now become 4 ringgit per unit. Okay, now got it already, Continue. There are a few more questions coming through WhatsApp, not here. I will discuss, I will answer you because unless the question is very critical, I will answer you here. So there are students sending WhatsApp to ask questions, but let me have a look. If this question not significant, I don't answer here, I'll answer later. Now, next. I will give you another example. I'll give you another example. Inventory. Okay, here. I'll give you another example. One thing good about computer is I can cut and paste this. I'll give you another example. Look at here. My question is like that. Sell at markup 30%. Sell at markup 30%. So if the question never talk about selling price, sell at markup 30%, you use your calculator, 500 times 30%, that is 150. Profit. So that means it should be sell at 650. You got it? Sometimes my questions like that. I never give you these figures. So you should know that it should be able to sell at 650. This one is not given in the question. Question tells you the markup is 30%. You know that it's 650. And my question says subsequently disposal, say for example, 25% of these inventories at NRV. Remember, 25% of this inventory at NRV. Okay, don't put 25%. 20% will do. To make your life easier, 20% of this inventory at NRV 180. Which is below the cost of 100,000. But it isn't 80,000. So 20% of this inventory, 20% of this inventory, cost is 500, means now it's how much? It's 100,000. Assume that 20% of this inventory, because cost is 500, am I right? 20% will be 100. They sell at NRV 80,000. So below the cost already. This is below the cost. They provide evidence of condition existed at the end of the 31st December. Only 20% of this goods make a loss of 20,000. So your loss will be 20,000. Your loss will be 20,000. Not all. That means this inventory, they are not ordinarily interchangeable. Okay, they are not ordinarily interchangeable. This crude inventory damaged already. This inventory already damaged or obsolete. So lost 20,000 only to be adjusted. Clear? This item should be sold at this item, this should be sold at 30% markup means 130. Remember that? If based on the markup originally 30%, 100,000, 30% will be 30,000. So it should be able to sell for 130. But now you sell for 180 only. Don't tell me the loss is 50. The loss compare the cost. Loss 20,000. Can you follow? This assumption, they are not ordinarily changeable. They are not in the single class. That means there are some good inventory and there are some bad inventory. So there are some inventory bad already. sell at a lower price. There are some inventory in a good condition, sell at a cost. You record at a cost. They are not interchangeable. So under specific identification, remember inventory just now we mentioned that they are not ordinarily interchangeable. So we follow specific identification. I think just now we mentioned that specific identification. Paragraph 23, specific identification. They are not ordinarily interchangeable. So the bad one, record an NRV. The good one, record a cost. Okay, now next, this is all adjusting event. This one called adjusting event. This one called adjusting event. Just now lost 50,000. You adjust the 500 to 450. You lost 50,000. Altogether, you lost 50,000. If I say 20% of this inventory lost, so your loss only 20,000. Listen here. There's 1 year, I changed the question. It should not appear, but I just want to let you know that. If, look at here. If I change this one to 110, I change to 110. Can you see NRV more than the cost? NRV more than the cost. This is the non-adjusting event. Indicative of condition arose after the year end. Instead of selling at 130, you can sell at 110, but still above the cost. I repeat, this is a exceptional case. You use your pencil just now. If NRV is 110, more than the cost 100, this is the non-adjusting event. Why? We only adjust if the NRV below the cost. We only adjust if the NRV below the cost. Now NRV above the cost, non-adjusting. Non-adjusting. NRV above the cost is non-adjusting. Non-adjusting, but you need to disclose this item is supposed to be sold at 130. Now can it sell at 110? It doesn't affect the financial statement last year. You just disclose in the note to account. Understand? So this one I just mix a little bit changes. Okay, done. Now come back to our lecture note here. Just now we are talking about non-adjusting event. We got A, B, C, D, E, F, G, H, I, J. Listen here. all this one will cover in your degree level. All this one will be covered in a degree level. In the tutorial, we cover one of it, changes in the tax rate. But I say I'll discuss in the lecture. Okay. So the example given to here, you only need to know even this business combination you study on the week number 10, 11, 12, 13. A plan to discontinue an operation. Yes. Destruction of the major production plant. Yes. This non-current asset held for sale is not covered in the syllabus. That means you need to know only A, B, and B only. Example, you need to know only A, B, and D. Not only A, B, and D. Now I'll go back to here. The sales of inventory after the reporting period, NRV below the cost, adjusting event. Use a pencil just now. If NRV more than the cost, non-adjusting. Don't do anything. It's non-adjusting event. Okay? Now go back to bankruptcy. Bankruptcy of the customer. The process of the bankruptcy will take a few months. Minimum 3 months. It can be 6 months. It can be a year. So this is the reason why bankruptcy confirm a loss existed at the end of reporting period. Understand? However, can you see that it's not in the note? It's not in the standard. You listen carefully. However, today is 23rd of February. Today is 23rd of February. I read from the newspaper, yesterday, 22nd, there was a fire. Yesterday, 22nd, there was a heavy rain. Flood. Damaged the factory of the Encik Ali. Encik Ali, I sold good to Encik Ali last year, 100,000. And he promised to pay me in 3 months' time. December, 3 months' time will be January, February, March. Next month, March, he's supposed to pay me 100,000. So I look at the news in the newspaper, the whole factory of Encik Ali damaged. Do you think that you got any chance to recover the amount from Encik Ali? No. So in this case, the bankruptcy of the customer is not because of his position, his condition at the end of 31st December. It's yesterday, 22nd, the fire or the flood damaged a warehouse. Very likely, there's a very high chance, more than 90% sure, Encik Ali cannot pay you. So again, this is a non-adjusting event. Non-adjusting event. Take note on that. I think in the tutorial, I have another question. 31st December, when you close account, January 10, you sell good to Encik Baba. January 10, you don't know whether or not Encik Baba is good customer or not. On the January 10, you sell good to Encik Baba. January 10, January 10 hari bulan. And 20 hari bulan February, the court decided Encik Baba a bankrupt. So again, because you never do your homework, you never check properly your customer, is it worth to give credit or not? So in the end, Encik Baba bankrupt. It takes few months. From January to February, it's only 1 month. But in actual fact, 31st December, he already got financial difficulties. He tried to pay him out. He buy good from you. Hopefully can sell at a profit, can settle the debt. Manatau, he's still bankrupt. So in this case, it should be adjusting event. But for you, you got nothing to adjust on 31st December. You got nothing to adjust on the 31st December because Encik Baba belum dilahirkan lagi. belum wujud lagi. So the loss must be existed. Can you see that? The loss must be existed at the end of the reporting period. And when you sell good to Encik Baba on the 10th of January, that means on the 31st December, in the account, you never see Encik Baba's receivable. So that's why this is again another non-adjusting event. Clear? So that's what I want to share with you. Next. Just I'm talking about profit sharing. Company decide to pay you profit sharing as an incentive. Karakan incentive. Salesman, end of the year, you can achieve the certain sales target. I'll share 1% of the sales. Bonus payment. Employee working very hard, end of the year, company pay bonus. This is called an obligation at the end of the period, so it's an adjusting event. But dividends, different story. Dividend shall not be recognized. If the company declare a dividend to the holders of equity instrument, this is called ordinary share. Use your pencil jot down, ordinary shares. If the dividend declared to holders of equity instrument, dividend to the ordinary shareholders only, shall not be recognized as a liability. That means we are not going to do any adjustment because this one is after the reporting period. Any dividends after the reporting period shall not be recognized because no obligation. Bonus payment, there is an obligation. Bonus payment, there is an obligation because you already promised the employee. Profit sharing, you also promised the employee already. There's an obligation, there's a duty, responsibility to pay. But dividend, there's no obligation. Even though the companies make profit, there's no obligation to pay. It depends on the dividend policy. So in this case, you need to disclose in the neutral account. That's on the dividend. Clear? No debit, no credit. So this is called non-adjusting event. Dividend always is non-adjusting event. In the past year question, I changed. Dividend declared. Dividend declared on 30th December 2020. Remember that? Mengisytiharkan declared on 30th December or 31st December, the last day. That one you can recognize. You are going to debit dividend, credit dividend payable. Understand? I changed the question from this. Declare after reporting period, you should not recognize. But I changed the question to declare on 31st December 2020. Then, yes, you need to recognize. How to recognize? Debit dividend, credit dividend payable, because not yet paid. Okay? Until 31st December, not yet paid. You're going to pay on the 10th of January. So, debit dividend, credit dividend payable. But paragraph number 12 saying that if declared after, then you can only disclose in the neutral account because there's no obligation. Clear? This one is very important. Going concern. There are still students ask me the question, what is a going concern? Entity berterusan. Entity berterusan. That means the business will be carried on in operation for a foreseeable future period of time. You are going to continue. You make assumption. Your business will be carried on. You got neither intention, okay, to stop. To liquidate means to stop. Okay, remember, if the management determine after reporting period either it's intend to liquidate, to sell, to cease, stop trading. To cease trading means to stop business. To liquidate means to sell your asset to get back the money. Or there's no realistic alternative. Means you got no choice already. You got no choice already. For example, you see because of this COVID-19, tourist industry, no hope already. But recently, they say cuti Malaysia has allowed. Looks like there's some sunrise. So that means the tourist industry, they still can get this tourists travel around in Malaysia. So in this case, when there's no realistic alternative, if you got no choice, you need to close down the business. Restaurant, hotel, can you see that? I think quite a number of hotel, restaurant closed down because no business, because no choice already. Entities shall not prepare on the going concern. What is a going concern? Because of going concern, you apply all the basic concept. Because of going concern, your accounting period, every year you need to prepare account. Now no more going concern. This is the last year already. Accounting concept, no need to apply. No more accounting period. No more historical cost. Because your asset not going to use for another 3 or 4 or 5 years. You are going to apply realization concept. All the asset to be realized and sell it, get the money, pay back. There is no more matching concept. No more revenue to deduct expenses. No more consistency concept. You don't need to apply first in, first out WAC every year because this is the last year already. Okay, all this basic concept convention is no longer applied. It's no longer applied. That's the meaning of if the entity determines that they are going to liquidate, sell all your asset to stop the business activity, you got no choice. That means you should not prepare your financial statement on the going concern. Not on the going concern means all the accounting concept and convention no need to apply already. So paragraph 15 tells you that what's the reason? Deterioration in the operating result. That means you are making losses, continue making losses. No point to continue unless you got too much money to know how to spend. You got it? So deterioration in the operating result of the financial position indicate the need to consider whether going concern still appropriate or not. Okay? So if the going concern is no longer appropriate, the effect is so pervasive, standard require a fundamental change. Can you see that? Changes in the basis of accounting rather than adjustment to the amount recognized within the original basis. So this will be change. Change in the basis means what? From historical cost, change it to realizable value. When the going concern no longer appropriate. So we make changes rather than adjustment. Non-current asset become current asset. Non-current liability become current liability. Understand? That is called changes in the basis of accounting. Historical cost, change it to realizable value. No more historical cost. So, MFRS 101, we're going to cover in week number 10. Financial statement, not on a going concern basis, you need to show in your disclosure note. You need to show in your disclosure note. Management is aware about material uncertainties related to the event or condition that may cast significant doubt upon the entity's ability to continue. For example, just as I mentioned, your company is doing very well. but one of your customer, Inci Baba, warehouse was damaged by the fire, damaged by the flood. Inci Baba owe you 100,000. Inci Baba is one of your major customer. Your receivable, you may have 150,000 receivable. Inside the 150,000, 100,000 from Inci Baba. So can you see that if Inci Baba bankrupt, you also may become bankrupt. That is called cast significant doubt upon the entity's ability to continue as a going concern. Your business may be affected. You got it? So this is required by IS number 1, or so-called MFIS 101. Disclosure, important thing is the date when the financial statement authorized for issue. So after this, it do not reflect any event after the date. If your decided date, just I mentioned, 20th of March, Dua Puluh Hari Bulan March is the date the financial statement authorized for issue. Anything happen after 20th March, it should not reflect inside your financial statement. Updating disclosure about condition. Receive information after reporting period. If the entity received information after reporting period about condition existed, condition already existed at the end of reporting period, then you need to update it, the disclosure related to this condition. So sometimes this information not affect the amount. Not affect the amount. You need to update also. Okay, so IS 37 I will discuss in the subsequent lecture. So for non-adjusting event, remember, these events are so important, it will affect the decision making by the user. Entity shall disclose what happened and how much is financial effect. Yeah, so this one I discuss just now. So I think with that, we end this lecture. Remember this effective date, it should be 2005. Now, this is a revised IS number 10. Yeah, this is a revised IS number 10. So you prepare for the next lecture on this provision, contingent liability, and contingent asset. Okay. Any other question you want to ask up to here? IS 10, nothing long. Okay. So from the tutorial, most of the time you can see cases is given, scenario is the right written answer. So you need to answer. 194 plus 21, I got 215. Okay, good. Any other question I ask? If not, I will end the lecture here. We still got about 10 minutes left if you want to ask question. I try to end at least 15 minutes earlier. Okay, otherwise you can leave the class now. Okay, thank you very much. I'll see you. Okay, welcome. Bye-bye. You may leave the class. Welcome. Okay, welcome. Bye-bye. SEAL 19 in the live stream here. Any more question? There are still 5 students in the live stream. I'm going to stop this live stream.